Hello and welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me today is Shreyansi Singh. Let's take a look at the big news of this hour. Infosys has come out with its numbers. Let me quickly take you through what these numbers are looking like. On a prima facie basis, you have revenue that has come in, a good move coming in fact for the revenue as well. You have revenue that has come in at 4,714 million, that's 471 crores rupees coming in compared to 456.4 last quarter, sequentially 3.3% higher. You have let's take a look at what the constant currency is looking like as of now. 3.6% higher sequentially, 2.5% constant currency increase on a year-on-year basis as well. And you also in fact, let's take it across to Anisha, because she's the best person to take us through what Infosys numbers are looking like. Anisha, what's your first take?
It's a blowout set. I think nobody was expecting that kind of a number to come in. 3.6% sequential constant currency growth. That compares with our expectation of 2.2%. So there's a beat of 1.4% on the top line itself. No surprise then that the company has gone ahead and increased their full year guidance for revenue. That stands at 3 to 4% right now as compared to 1 to 3%. Nobody on the street was expecting an uptick with respect to guidance. So that's the big positive out here. And that's coming on the back of the kind of solid number that we have seen in Q1. Plus the fact that the margin beat has been quite surprising as well. At 21.1% this quarter, we were working with a number of 20.7%. So that top line is of course trickling into the margins as well. And hence to the profitability as well, which is a big beat versus expectation. The TCV as well is very healthy. $4.1 billion TCV is what they have booked in this quarter. Record number of large deals is what they're saying. 34. We were working with a deal TCV number of $2.5 to $3 billion because that's largely been the run rate. 4.1 billion also tells you that there's a good runway of growth which is available, and they have the confidence to go ahead and increase the guidance right now. Not just that, even if you look at the other internals, it does seem like the BFSI has turned into the green this time around. There's a growth which the BFSI vertical has reported. It's a paltry number of 0.3%, but nonetheless at least a bit of a growth coming in. That itself is a good news coming in for the street. Additionally, if you look at the commentary also coming in from Salil Parekh as well as the CFO, both are talking about the fact that the start to the year has been very strong. But more importantly, they are also quite positive about the way forward for the company. In fact, Salil Parekh says that they have had an excellent start to FY25, broad-based growth, operating margin expansion, robust deal wins, and highest ever cash generation. And also the client trust is something which is improving. They're also talking about generative AI capabilities. Mahantesh Sabra joins us on the show. Mahantesh, is it just me who's pleasantly surprised with the numbers, or is it you as well who's giving me company here?
Yeah, I think that the top line growth of 2.5%, constant currency YOY growth and 3.6% quarter on quarter is a great surprise, because if I'm right, 3.6% constant currency quarter on quarter growth has not been achieved for the past 6-7 quarters. This is the best growth they would achieved in several quarters. At least, if not for all the quarters, at least for the first quarter, start of the year. So this is a great number that they have reported, but I haven't seen what their guidance is actually for the year ahead.
Has been upgraded, so they're now talking about a 3 to 4% uptick in terms of the revenue growth, which is of course not a big number by itself, but the fact that they've gone ahead from 1 to 3% growth earlier guidance, it now stands at 3 to 4%. That itself is meaningful because they have increased the lower end of the band by 200 basis points, and even the upper band has been raised by almost 100 basis points, though it's coming with the same margins. So they're continuing with the 20 to 22%. But you're expecting big upgrades to come by, Mahantesh, on the kind of number beat that we have seen from Infosys?
Of course, the guidance upgrade and the number beat should mean that we will have a lot of upgrades happening from the street, particularly in terms of upgrades, particularly in terms of later quarter. That means the run rate would likely start growing or remain elevated as we move ahead. So it will not be just 200 or 300 dips in terms of upgrades of earnings. It could be well over 400, 500 dips kind of number.
Is it in the price? Because the stock has been doing quite well, and I'll request our team to probably put up a 1 week or a 1 month chart, because I just want to take a look as to how the stock has been doing over the period of last few days. That has been doing quite a bit of run rate. So 5 days it's up 6%. Over the last 1 month itself, that stock has run up 18%. Is it in the price, or there could be more upside, because you're saying that the upgrades are going to be meaningful as well, Mahantesh?
It's difficult to say because, a lot will depend on what the valuations will be for the sector ahead, coming from a sector which is facing a lot of headwinds as we go ahead, particularly in the US with the new elections coming up, presidential elections coming up, and a lot of companies not so very upbeat in terms of their discretionary spends. So while the EPS upgrades could be robust, I'm not too sure about how the valuations will be evaluated by the street ahead. There could perhaps be a lower valuation multiple being ascribed as we move ahead.
Yeah, but given the fact that growth had started kind of outpacing, or Infosys had started outpacing versus TCS at least a couple of years ago, might kind of bring that gap, into the narrower category. Sandeep Agarwal also joins us on the show. Sandeep, a solid beat on all the parameters you look at: 3.6% constant currency growth, margin at 21.1%, profitability well above the 6,300 crore mark, deal wins coming in at $4.1 billion, attrition has come down, guidance has been increased, even though the headcount has kind of come off on a quarter-on-quarter basis, but that ultimately might be good news for margins as well. What kind of upgrades are you expecting for Infosys, and what kind of reaction should we anticipate tomorrow morning?
Good afternoon, and thanks for having me on the call. I have been saying this for almost a month now that this is beginning of an upgrade cycle, and the reason I have been saying for upgrade cycle is very simple. The attrition is very sharply from the peak last 4 quarters back, and every 1% fall in attrition leads to 30-35 basis point improvement in margin, lag effect. So now that margin benefit has started showing up, in my view, this year we will see at least 2% more operating margin improvement for all the large players. That means that, we will see our EPS upgrade of 12 to 14%. And in case of mid cap, you can see even 16-17% EPS upgrade, and small cap maybe 25% EPS upgrade. So I think this is not priced in any of the stock. There has been some rally in last 1 month, but I think this is beginning of the upgrade cycle. And remember, when at the peak of US tech, our demand starts improving because we are finally service providers. So take the sale, they produce, do maintenance or development of that. It is as simple as that. So our growth will come for next 4 to 6 quarters in a robust way, and margin improvement will be the key.
Margin is something which is, slightly surprising on the fact that when the revenue has been upgraded to that level, and even this quarter the beat has been substantial. Yes, the margin has expanded, but it's coming at 21.1% versus our expectation of 20.7%. What does it do to the rest of the IT peers as well, Sandeep? Does the pecking order change? Because of course TCS was expected to be, one of those safer bets. Do you think after those series of disappointment from Infosys, that will get washed away and people will come back to Infosys in a hurry?
See, I will not say this, but what I will like to say is that this is an upgrade cycle. So everything will do phenomenally well, and people do not, do an exact comparison of this over that. When the wind is flowing and there is a huge tail right now for us to revive margin. So I think everything will do well, and it is time to be in the sector overweight rather than choosing over another. But I will still refer large cap over expensive. ER&D is totally different ball game. So ER&D, I am okay to pay more value. In this service, I will be more comfortable paying reasonable value to the service, large cap service player.
Sandeep, as well as Mahantesh, we'll let you go on that note, but Omkar is also joining us on the show. Omkar, first quick word on Infosys, beat on all parameters. What kind of upgrades do you expect in your numbers come tomorrow, and what's the overall expectation as to how the pecking order within IT changes with these kind of numbers, and also will it follow an earnings upgrade cycle that Sandeep was talking about?
Yes, I mean, definitely what Sandeep sir is talking about, there is definitely we can see some pickup in the demand scenario. especially from the Northern American side. Even LTI Mindtree has yesterday also said that there is a pickup for BFSI vertical, and also the Infi have demonstrated good. But it is very premature to say, the demand scenario has changed completely. Maybe in a couple of quarters, we need to understand from the management how the engagements are going and how the deals are been ramping up. That headcount is still, on a negative side, and so they are not hiring aggressively as during the COVID times, and the attrition is still being moderated. So it is premature to say there is a strong pickup in the demand side. But I definitely believe there are some green shoots in some pockets, maybe on verticals like BFSI, manufacturing, and also the other verticals. But yes, definitely it's a good set of numbers and will likely to have the positive impact, and maybe on a revision on the valuation part.
Not only earnings, even the valuation multiple might get re-rated. That's the interesting take, because that will mean there'll be a bigger upside on Infosys. The stock has been rallying quite a bit for the last few days, 6 to 7% in a matter of weeks, 17% over the matter of last 1 month. But clearly more upgrades to follow. That's the word coming in from Omkar. In fact, on that note, we'll let you go. Thanks, Omkar, for joining us. But if you're just joining us, a solid show coming in from Infosys in the quarter gone by. The revenue growth in terms of constant currency came in at 3.6% versus our expectation of a 2.2% growth. That is trickling down to the operating margins as well, because there's a beat on margin front, 21.1% versus the expectation of 20.7%, and there's a solid 150 to 200 crore beat coming in on profitability as well. More interestingly, the company has gone ahead and increased their guidance for the entire year. The revenue growth guidance now stands at 3 to 4% versus the earlier guidance of 1 to 3%, even though the guidance in terms of EBITDA margin has been maintained, or EBIT margin has been maintained at 20 to 22%. In terms of other details, deal win momentum is very solid, $4.1 billion worth of TCV this time versus expectation of $2.5 to $3 billion, and that compares with LTIM or TCS, wherein the deal win numbers were softer versus expectation. And overall as well, if you look at the BFSI vertical, it has managed to report 0.3% kind of growth on a year-on-year basis, plus some other verticals shining bright for the company. The only thing to watch out for is the headcount decline. 1900 thereabouts is the headcount decline that we have seen quarter on quarter, but the deal win momentum plus the execution momentum remains strong, and that's why analysts are expecting upgrades to come in on Infosys. On that note, we'll wrap up this coverage of Infosys earnings. We'll see you right back on the other side of the short break.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at how the day went by in terms of the trading session. Now, the record streak is something that we saw sustaining, and Nifty did top that 24,800 level. We saw quite a recovery coming in the second half of the session. When we talk about Nifty, you did also have the Sensex that also soared above the 81,000 levels, and a good recovery coming in for that one as well. What didn't do well though was the SMIDs, or small caps and mid cap indices, and you did see some bit of underperformance coming in there on your screens as well for those. And in terms of top gainers, then in terms of sectors, you did have IT that performed well. So be it LTI Mindtree, be it TCS, Infosys, Wipro, all of those kept the IT index underpinned. And you did have FMCG that also eked out some bit of gains coming in there, and followed by finance and consumption as well that saw good gains, decent gains coming in there as well. Now, what didn't do well though was the media index, and a part of that was of course Zee Entertainment, but we'll come to that later. And you did see the Nifty Media Index not doing all that well, along with PSE and metal indices as well, because there as well you saw a little bit of underperformance coming in. What did well though was the shrimp stocks, because be it Avanti Feeds, be it Apex Frozen Foods or Coastal Corp, you did see some stellar gains coming in for those as well. Now, there was of course revival in HNI interest, and that is something that underpinned all of these counters. And you did see some of that realizations expecting to improve impact also coming in for these counters as well. Lastly, let's also take a look at ABB, because that one was also sulking in trade on account of the global parent seeing that 3% India order growth as well. And that rub-off impact is something that we saw coming in for ABB. And in terms of other counters that did not do well, you did also have HDFC Bank as well as Asian Paints after that weak set of numbers. So that largely is what the handover looks like, doesn't it, Sneha?
Absolutely, and it's just funny how in the morning we were talking about why the GIFT Nifty did not look justified when it gave such a big gap up open towards the end of that first hour in the morning towards 8 a.m. itself. You had GIFT Nifty very subdued, but look at how the trading session has actually panned out. Very stellar moves coming in. Let's keep it going with some of the top news that we were spotting today. Now, there's a new scheme in the works for space equipment manufacturing, and that is likely to be announced in the budget. This is what sources tell us. So we'll keep a close eye on the big event that is just a few days away from us. Let's talk about earnings, because just a moment ago you had Infosys come out with a brilliant set of the numbers right off the bat. Let's talk about the big boy Reliance coming out with its numbers tomorrow. EBITDA and PAT are expected to see the biggest drop in 7 quarters. A subdued set is what is expected. So, well, let's just sit tight and see what Reliance has to report tomorrow as well. Now, Ultratech, JSW Steel will also be reporting Q1 earnings. And like Shayansi mentioned, you had Zee Entertainment drag the media index via the because of the fundraising plans via the FCCB issue. That counter has closed 8% lower in today's trading session. A very, very under pressure is where Zee Entertainment was. But well, yes, this is everything that you need to be watching out for in tomorrow's trade.
Well, absolutely. And with that, let's also take a quick check on the derivatives roundup that we have for you right now. When you take a look at the index futures trend, you're looking at for the July expiry for Nifty, you're looking at a long build-up coming in. For Bank Nifty, then you're also looking at a long build-up coming in there as well. Let's also take a quick note of what the India VIX is doing. And you've seen gains of about 2% coming in there as well, and that is the kind of handover that we have in terms of the India VIX. In terms of active call levels for 25th July expiry, you're looking at 24,800 where call buying was registered, along with 24,900 where call buying was also registered. And in terms of active puts then for 25th July expiry as well, you're looking at put writing at 24,700 levels and 24,600 levels. And in terms of key support levels, then there was 24,700 making that key support level. So that is what the derivatives roundup is shaping up to be.
All right, very interesting derivative trends being seen, because if you remember, day before yesterday, markets were closed yesterday, but day before yesterday, the trend on Nifty Bank was long unwinding, and as of now, we have a long build-up, so very sharp and very quick reversal over there. But we're just days away from the next big event for the market, and that's the Union Budget. Nilesh Shah of Envision Capital expects the budget to be an infra and investment-oriented one. Shantanu Sengupta of Goldman Sachs hopes that fiscal consolidation might continue, while Mark Matthews of Julius Baer emphasizes that India is rightfully at the top of all emerging markets. Let's go across and listen in to see what else you're expecting from the Finance Minister's Union Budget this year.
I don't think the focus, the priority is going to change. I still believe this is going to be more an infrastructure and investment oriented budget. In the first place, clearly what the markets would surely not want is a hike in the tax rate. So I think that's something which probably the market is not prepared for. There is, of course, talk around it, but I don't think the market is really prepared for. And if that were to happen, that would surely impact the markets. On the expenditure side, clearly believe that the big focus will continue to be infrastructure.
For the U.S. market to stop being such a great big bull market. And I don't mean to become a bear market. If it becomes a bear market, everything will go down. But instead of going like that, if the S&P just goes like that, then of course people start to look for alternatives elsewhere. And then they would immediately notice India because of all its attributes. It is rightfully right at the top of the emerging markets. It's entirely normal, even in bull markets, that you get a correction of about 10 to 15% at some point during the year.
The fiscal, I would say, which expanded during the pandemic, but frankly, India wasn't an exception because all other countries also expanded their fiscal during the pandemic. is on a path of consolidation now, and we expect that to continue over a period of time. That debt to GDP number needs to consolidate to below 80% and probably get close to 75, which is why we think that the government is very likely to stick to the fiscal consolidation path and target 5.1% of GDP in fiscal 25. But the more important thing is that going forward, also we expect that consolidation to continue towards 4.5 or lower fiscal deficit.
All right, then that was the word coming in from the experts. Well, Snehi, just a few days to go for the next big event of the market. And we're definitely looking forward to that. But with that, we're completely timed out on this edition of Your Trades on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching.